You can never have too much Bitcoin. We're big Bitcoin bulls. Our thesis is that Bitcoin is digital property, but without the risks and liabilities of commercial real estate. It's a digital commodity without the risks and the liabilities of gold. It's a digital tech investment without the risks and the liabilities of big tech. And so we're bullish. We're really excited about our partnership with Microsoft and AI. We're the first BI company to put AI into our product line. And it provides great artificial intelligence boost to our business intelligence business. We're going to use it to grow the business by acquiring new customers. And also it's accelerating cloud adoption within our customer base. MicroStrategy is a differentiated offering. I think spot Bitcoin ETF is a great thing for investors, but we don't charge a fee. We use intelligent leverage, and we can generate a tax-deferred Bitcoin premium for our investors. So for people that are really long-term bulls on Bitcoin, we represent a pretty attractive option or alternative to a spot Bitcoin ETF. Well, if you're not charging a fee and you're generating a premium and you're holding it over the long term, then one would think that it'll be valued at a premium versus the underlying asset. Most of the natural sellers of Bitcoin in the market right now are Bitcoin miners, and they have to sell to pay their electricity bill and their capital cost and retire their debt. That's about $1 billion a month worth of selling into the market. The protocol forces that to be cut in half as of about next April, late April. So you're going to see $12 billion of natural selling per year converted into $6 billion of natural selling a year. At the same time as things like spot Bitcoin ETFs increase the demand for Bitcoin. So that's why all of us are fairly bullish over the next 12 months. Demand's going to increase, supply is going to contract, and this is fairly unprecedented in the history of Wall Street.
Michael Saylor is dropping some mind-blowing predictions about Bitcoin. He's basically saying that the next year is going to be the biggest thing in financial history, and not just for Bitcoin, but for any financial offering out there. Yes, you heard that right. It's time to get excited. Why is Saylor so pumped up? Well, it's all about a perfect storm of events coming up for Bitcoin. First off, there's the Bitcoin halving event happening next April. This isn't your typical halving. It's a game changer. It's going to cut Bitcoin mining rewards in half, which means there will be way less Bitcoin flooding the market. That's not all. There's a buzz on Wall Street that the first ever spot Bitcoin ETF might finally get the green light by Christmas. If that happens, it's going to open the floodgates for mainstream investment in Bitcoin. Saylor puts it like this. You're going to see $12 billion of natural selling per year converted into $6 billion of natural selling a year at the same time as things like spot Bitcoin ETFs increase the demand for Bitcoin. In plain English, the supply is shrinking and the demand is about to explode. This is like a 1-2 punch that's never been seen on Wall Street. And what's even more exciting is that big financial institutions are getting on board with Bitcoin. Saylor believes that when banks and responsible custodians start managing Bitcoin, it's going to bring stability not just to Bitcoin, but to the entire crypto industry. He's not shy about saying he thinks we could see a 10x increase from where we are now. But you know what's even crazier? Bitcoin's been on a wild ride lately. It jumped over 11% to $31,000 recently, thanks to all the hype about that spot Bitcoin ETF. And the price keeps climbing, hitting a 2023 record at $35,878. It's currently chilling around $34,903 according to CoinGecko. And here's the kicker. The big investment research firm Bernstein, which used to be a Bitcoin doubter, is now saying that if the spot Bitcoin ETF gets approved, Bitcoin could hit a staggering $150,000 by 2025. That's some serious cash. So there you have it, folks. Michael Saylor's dropping some major truth bombs about Bitcoin's epic rise, and it's a thrilling time to be in the crypto game. Get ready for an unforgettable financial adventure. Let's continue our discussion with Michael Saylor.
The accounting treatment for Bitcoin up until probably 2024 is as indefinite and tangible. And so if you're a GAAP accounting company in the Western world, generally what that means is that if you were to acquire Bitcoin on your balance sheet, then when it trades down, you'll take the losses. And when it trades up, you will not recognize the gains. And so it's a one-way ratchet function on a balance sheet. you will mark it down to the lowest price it ever traded at in the history of your ownership of it. And then you will never be able to recognize the current price that it is valued at. So it creates a degree of opacity and confusion in the balance sheet. And then that confusion in the balance sheet also washes through to be confusion in the P&L, because if you actually have a example where Bitcoin trades down, you take the loss and it becomes an operating loss. So you could actually buy Bitcoin, have it trade down $50 million, and it would offset $50 million of operating income. And so the P&L of the business that generated $50 million of operating income would look like it generated $0. So you're not breaking it out as an investment gain and an investment loss. You're actually combining your losses from the investment in Bitcoin with your losses from the operation of the business. And that means that if you're an objective observer, you can't tell whether the operating business made or lost money, and you can't tell whether the investment made or lost money. You're generally going to be biased toward presuming that the business lost a lot more money than it did, because when the business makes investment gains, it won't show them, and when it makes losses, it will show them. So the ownership of Bitcoin on the balance sheet under indefinite intangible treatment will always be a drain to the balance sheet, a liability to the balance sheet optically, and it will also be a liability to the P&L. This is the kind of treatment you would give to a very scary, exotic asset that you didn't want people to acquire. And so generally, it's the bucket you put in anything that's new or different, misunderstood, or you just don't have time to deal with. Between the years 2020 and 2023, it became increasingly clear to the accounting establishment that there are a lot of mainstream companies that wanted to acquire and hold Bitcoin. So MicroStrategy was the first really big public acquirer of Bitcoin, but Block acquired Bitcoin, and then all the Bitcoin miners acquired Bitcoin, and then Tesla acquired Bitcoin, and this became a public issue. It was taken up with a lot of community support by FASB. After a very thoughtful process, they came to the conclusion unanimously that they should give Bitcoin fair value accounting treatment rather than indefinite intangible accounting treatment. The latest communication on that indicated that they'll make this mandatory for all public reporting companies as of December 15th of next year.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.